Hey everyone, hope you're having a great weekend so far. Welcome to the 25th episode of Investing Kev. This is super exciting to have reached 25 episodes, and I'm very thankful for everyone for tuning in. In today's episode, we're going to take a look at Fintech Holdings, ticker TIGR. With the rise of fintech and the rise of retail investors hopping into the stock market, there is a huge race between brokerages to offer the easiest path to investing in the stock market, not only domestically but around the world. We'll take a look at Fintech and their company overview, their financials, the Q2 earnings which released today so it's hot off the press, their outlook, the risk factors, price target, and final thoughts. For full disclosure, I do not own any shares currently of Fintech and always do your due diligence. As usual, you can follow my investing journey as I invest in 4 different common investing strategies. This is for fun, it's just to see how each portfolio does over a long period of time and how it compares to one another. I recently did a Q1 stock portfolio update last week, so feel free to check out that episode. And the link to my investing spreadsheet will be in the description box below. Alright everyone, it's time to learn about Fintech. Looking at the company profile, Fintech Holding, known as TIGR Brokers in Asia, is a leading online brokerage firm focusing on global investors. Their proprietary mobile and online trading platform enables investors to trade in equities and other financial instruments on multiple exchanges around the world. Their firm offers innovative products and services as well as a superior user experience to their customers through their mobile-first strategy, which enables them to better serve and retain their current customers as well as attract new ones. Right now, they have over 1.4 million account holders with an annual trade volume of $219.1 billion. They offer a one-click subscription service for US and Hong Kong stock IPOs with 80 plus exclusive US IPO subscription services. And you can invest globally with their single integrated account. You can invest in the US stock exchange, the Hong Kong markets, the United Kingdom markets, Australia, and Singapore. TIGR Brokers offers free access to real-time quotes and in-depth charting to stay connected to all key markets. Their trading platform is low latency and ensures client orders are executed immediately, and they offer elite level tools to seize opportunities and more. I want to take a look at their actual product, which is their TIGR Brokerage account. I installed the app on my phone, but I want to show you the desktop version. Because I'm a US citizen, I had to register through a company called TradeUp, which Fintech acquired back in July 2019. We'll take a look at the company itself for our example. You can see that this is Fintech's stock chart. If I click on the Filings tab, I can see all their filings. When I click on the Financials tab, I can look at their financial overview, their income statement, their balance sheet, and many more. I can click on the News tab and see any relevant news related to this company. And inside the Analysis tab, I can see which major institutions hold the stock, their short interest, and their open short positions. When I click on the Markets tab on the left-hand side, I can see a heat map of all the different sectors out there. For example, I just clicked on the Information Technology heat map and I can see that Apple is down 3.31% today. And inside the Discover tab, I can see a robust calendar where I can see earnings, dividends, and IPOs of pretty much every stock out there, which is awesome. Looking at their financial reports, you can see from 2018 to 2020, they saw a huge uptick in total revenues. In 2018, they had revenues of 33.5 million US dollars, and in 2020, they had 138.5 million US dollars. From 2019 to 2020, they saw a 136% increase, which was driven by COVID-19. People were on lockdown and they wanted to see what investing was about. They had operating costs and expenses of 107.3 million in 2020 and surprisingly saw a positive net income in 2020 of 19.1 million. From what I've read, this positive net income is temporary as this company needs to grow and will be funneling most of its income towards research and development, marketing, and other general expenses. Now I want to take a look at their second quarter highlights. In the second quarter of 2021, they saw a 98.7% year-over-year increase in total revenues to $60.2 million. Their total net revenues increased 95% year over year to $55.4 million. In 2020 Q2, they had a net income of $4.4 million, but this year they actually had a net loss of $21.5 million. What I like to see is their number of customer accounts. In the second quarter of 2020, they had 834,000 accounts. In the second quarter of 2021, they had 1.65 million accounts. Their number of customers with deposits increased from 168,000 people to 529,000 people. And their trading volume has gone up from $46.7 billion all the way up to $102 billion, with a total account balance of $8.2 billion in 2020 all the way up to $24 billion in 2021. When I look at the outlook of this company, I need to look at the growing trends in China. Looking at this article from January of 2021, millions of new investors piled into the mainland Chinese stock markets in 2020. Back in December, the mainland stock market recorded 1.62 million new investors, which was double the 809,300 reported a year ago. For all of 2020, new investors increased by 18 million to 177.7 million, which is roughly about 1.5 million new accounts a month. And just recently, China's stock trading volume surged above 1 trillion yuan for weeks as other investment options dry up. Since late July, daily trading volume in mainland Chinese A shares has held above 1 trillion yuan, and it climbed to a high for the year of 1.71 trillion yuan on Wednesday. That's about twice the daily average trading volume of the last 2 years of 840 billion yuan. And in 2018, about 65% of Chinese private household assets were in real estate versus 49% in the United States. That means a lot of Chinese capital could come into stocks. And the Chinese government wants to reduce the wealth inequality gap. This is from HSBC back in May, and I want to read the following. Economic growth has lifted more than 800 million people out of poverty, but both income and wealth inequality are increasing. Just 1% of households own 30% of the country's wealth. In our view, inequality won't correct itself without government intervention. Beijing's response to the wealth gap involves helping the 290 million migrant workers and almost 10 million university graduates a year to join the middle class while improving social safety nets for the vulnerable. The middle class, which earns between 15,000 to 75,000 US dollars, is a big driver of economic growth. Higher earners buy quality goods, boosting domestic demand and business confidence while helping mainland China transition to a consumption led economy. And what I also like about Up Fintech is their vision in expanding globally. Looking at their Q2 earnings report, they said the following. As we continue to invest in our internationalization, there was a significant increase in the number of newly funded accounts and the total account balance. We added 153,100 funded accounts in the second quarter, which is an increase of 353% year over year and a 30.4% quarter over quarter. Of the newly acquired accounts, over 60% came from international markets. Looking at risk factors, the number one risk factor is the government. With the recent data protection laws and regulations that's still ongoing in China, a lot of applications had to be removed from the app stores to ensure proper compliance with data collection and data protection. With Up Fintech's vision of going global, they need to not only conform to the Chinese government's data standards, but data standards around the world. The second risk factor is competition. There are a lot of legacy brokerages in China, but the more modern one and their main competitor is New, which is from the Futu company. In America, you may have heard the new Moomoo app, which is the American version. Up Fintech is considered the Robinhood of China, but here in America, Robinhood is going against SoFi, Webull, M1 Finance, Fidelity, Charles Schwab, TD Ameritrade, and many other brokerages. I do believe there is a market for multiple brokerages, which is what I see in America with the legacy companies and the new upstart ones. Either way, Up Fintech will have a lot of competition, and it's up to their leadership to continue growing revenues as more competition will force Up Fintech to spend more on marketing, research, and development, which will likely push them further away from profitability for the years to come. Looking at their 12-month price target, four analysts have given an average price target of $31.45, which is a 116% increase from its current price of $14.56. The highest forecast is $38.67, and the lowest is $21.06. Within the past month, Up Fintech has dropped about $2.56, which is a 15% drop, but today they saw an 8.6% increase of about $1.15 due to their solid Q2 earnings report. Overall, I'm very intrigued by this company. Mainland Chinese citizens are showing interest in investing, especially the younger generation, which is more tech savvy and wants to have access to markets around the world. TIGR Brokers allows investors to invest in the major markets around the world. When you pair that interest in investing and massive growth of new investors alongside the rising middle class in the coming years, Up Fintech is a bright future. I like their user interface, their user experience is solid, and they're expanding to diversify their revenues to be made up of many different investors across primarily Asia. Fintech has a very bright future, but competition will definitely put a lot of pressure on Up Fintech. As of right now, their management team has shown the ability to guide this company towards increased accounts, increased revenue, and expansion. Management is a huge factor in any company, but especially for a company that's trying to find its way in a very young and competitive market. I think that's a huge plus for this company. If you like this video breakdown of Up Fintech, please give a thumbs up, please subscribe, and let me know in the comments what you think. If there is any information that I forgot, please leave a comment in the comment section so we can all learn together. As always, thank you for tuning in, stay safe, and I'll see you all next time.